Hello and welcome again to the Share Show. This is the edition for week commencing the 2nd of August, recorded a little bit late on the 3rd of August because of heavy trading activity yesterday. But more of that later. July has been a tough month. The usual fall in the stock price before expiration was larger than usual and triggered a lot of stock being put to us at prices we were not particularly attracted by. Nothing to worry about though. Robust action is in place for each stock and put where it's needed. But first, before we get into the performance of the individual clubs, let's look at the market overall with Owen O'Malley.
If you look back, what we said last Sunday, that the Nasdaq was either going to go up here or go back down again. It looks more like it's going to go back down. Casting from Bali and Malta. Antoine has kindly joined us to keep track of the companies, and he's got some examples of where he sold calls in the past that we're going to take a look at. So in the interest of taking a quick look at the overall market, and then we'll just focus on companies that will be looking good to grow in the next couple of weeks. So as we can see here, we talked about this last week, that if you look back, what we said last Sunday, that the Nasdaq was either going to go up here or go back down again. It looks more like it's going to go back down again. So the Nasdaq, even though it's in an overall upward trend, don't be surprised if this week it pulls back to maybe around about 14,500, because it hasn't gone into the upper lane of traffic. So that's the top 100 technology companies. The Dow also shown a bit of weakness here as well. It's possibly going to revisit here. Will be very doable for the Dow to revisit 34,000. So we'll continue these lines forward just to see how they play out for the Dow, the top 30 companies. We'll go to the S&P 500 next, which is a fair reflection on the overall market. And again, it's shown a little bit of weakness towards the end of last week, and if that is followed through, the S&P could pull back to maybe around about 4,250 would be doable for the S&P. So let's take a look at the VIX, because the VIX, as we know, is a mirror image of the market. And because the market was getting a little bit shaky towards the end of the week, it's already shown signs that the VIX could go back up again. And what we love about the VIX is that when the VIX gets to around about 30, that's a very strong signal that whatever drop in the market has happened is now finished. So the VIX is a good indicator to know when you can have confidence to take up positions.
Thank you, Owen. And now let's look at the performance of the clubs. And at last, we have a clean edge with the trading platform figures matching the statements and checking out fully. These are shown below, and we can start the monthly comparisons once again. So we start with Tees Traders. Tees Traders are now the proud owners of stock in 6 companies. Each of these, with the exception of EDU, is above or close to being above break-even and rising. And we've already taken action to reduce our position on EDU from $11.15 to $7.08, and we'll bring it down again substantially further. I would expect to get that down to an exposure of less than $4 in the next week or two. In the meantime, Tees has got plenty of cash, and that cash, of course, is the profit reservoir. And over the coming months, 3, 4, 5 months, we'll be pulling that through into the value and profitability of the club. And Diamond now owns stock in 18 companies and has EDU puts, but no stock in that particular one. We've already reduced our exposure on these by 50%, and we'll continue to bring it down, but without loss, of course. Rule 1 is don't make losses. For Rule 2, refer to Rule 1. And Fortune 200 now has 6 stocks and EDU puts, but no stock in EDU again. And we will fettle the exposure on these this week. In actual fact, in the trading yesterday, that's already done. So perfectly happy with where we are with Fortune and kicking along nicely. There'll be more information on performance of the clubs at the meetings, which are monthly, and the dates for the next meetings should be coming out this week. And now a quick look at one of the techniques we use. There are lots of techniques that we use to achieve safety and to get ourselves out of trouble. This one is called taking the drop before it happens. So let's say we buy a stock at $25.20 and it rises to $25.40. Hooray! But then it looks like the stock is set to fall to $24. What could we do? Well, first, we could just sell the stock and take our 20 cents profit, which would be 0.8%. Or we could sell a $26 strike price call, and that's called an out of the money call because the strike price is above the actual price of the stock. That would get us around 35 cents. And if we then look at the value that we would end up with, if the stock did go down to $24, it would be $24 plus the 35 cents. So therefore $20.35, which would be down 85 cents, and it would be a loss of 3.4%. So what else could we do? Well, we could sell what's called an at the money call, and that's where the strike price is at or around the same price as the stock itself. So we could sell a $25 covered call at the money, and we get around 45 cents for it. We could still be left with that $24 stock, but our exposure would be slightly less because we got the extra 10 cents for the call. On the other hand, we would have lost the 20 cents out of the $25.20 that we paid for it. The value we'd be left with then would be $24.45. That's 75 cents down, a loss of 3.1%. Marginally better, but let's try something else. We could sell an in-the-money call. In-the-money calls are where the strike price is below the actual price of the stock. And if we sold the $24 strike price, we'd get about $1.70 for it. And that would leave us probably with the $24 share, and the value would be $24 plus $1.70 equals $25.70. So we have a gain of 50 cents, hurrah, whether or not the shares are called out, but they would now be more likely to be called out, and that would be the end of our involvement with the share. So let's try one more thing. We could sell another in-the-money call, a $23 strike price, and for that we get about $2.50. Now we'd end up with a value of $24 with the share plus $2.50, so that's $26.50 if the stock wasn't called. That would then be a gain of $1.30 or 5.6%. However, it's much more likely that the stock would be called at $23, so we'd end up with 23 plus 250 equals $25.50, or a gain of 30 cents, 1.2%. So to summarize that, we buy the stock for $25.20, it goes up to $25.40, and then looks set to go back down to $24. Our alternatives are ignoring brokers' fees and assuming the stock does fall to $24. 1, sell the shares for $25.40 and get a gain of 0.8%. 2, sell an out-of-the-money call at $26 strike price and suffer a loss of 85 cents, which is 3.4%. Thirdly, we could sell an at-the-money call for $25 strike price and get a loss, this time 75 cents, or minus 3.1%. Fourthly, we could sell an in-the-money call at $24 strike price, and for that, we could end up with a positive of 2%. And if we kept the shares, that could even give us more. Fifth, we sell an in-the-money call at the $23 strike price for $2.50, and we get a gain of 30 cents, which is 1.2%. If we could keep the shares under that circumstance, we'd be better off, but it's highly likely. So remember, with option 4, we're not only getting the best gain, we're also more likely to retain the shares than we are in option 5, and then we could go on to sell more of them. I hope that was easy to understand. I have to do this all the time. How the money moves. One of our members has asked for a diagram showing how the money moves around within smart investments. So here it is. Money comes in at the bottom of this diagram from the members. It goes off to VFX PLC, which is just a foreign exchange company. You'll have seen that when you actually transfer your money. They take fees, of course, for transferring between currencies, and they send it on to the Apex Clearing Corporation. They look after several trading platforms. So they take their fees, which are minor, but they take fees, and pass the money on to our US trading account. In the US trading account, we sell puts, we own and sell stock. Hopefully we sell it for more than we buy it. We collect dividends and we sell covered calls. Now, withdrawals from the account would include brokers' fees. They happen every time we trade, research fees, and the support fees charged by Smart Investments. There's also money that can come up from the members, although not much does. First, we would take out dividends. So that would be if somebody decided to take some of their money out from the profits that they'd earned. That would be classed as a dividend as far as we were concerned. Secondly, people could reduce their holding if they want to, for example, save for something particular and then take some money out to go off and buy it. Or if they unfortunately could leave the club for whatever reason. The reason would probably be death. I can't think of another good one. And that's then where money starts to flow back. So if we're going to bring money back, it goes from the trading account back to Apex, back to VFX, to our VFX PLC account, and then to the members. And that's also where Smart Investments take out the research and support fees. And that's how the money moves around within Smart Investments. Partnerships. Partnership is going well. I'm really pleased to say that we've now got our first introducers and partners on board, and they are earning. The Smart Investments website has a section with more details and an expression of interest form. There's an earnings illustrator, and there's also a downloadable explanatory brochure on the website that shows exactly how things work. And finally, just news on the live event. So come and meet us. We're going to be in the Midlands on the 24th and 25th of September and live, and we are now good to go. If you haven't already, complete the survey and give us an idea of numbers. But we've definitely got enough interest to run the event. The Friday afternoon is about statements, dashboards, and value line and more. And the Friday evening is very much a social event where we can get to know one another. And Saturday is about put trading. Those who attend this, which is fairly advanced training, will be eligible to join the trading teams of the clubs that they're in. So over the next few days, we'll be starting to send out booking forms, and also we will be asking to take a deposit. There is a substantial investment up front for room hire, etc., and we need to make sure that we're covered. And that's about it. So if anyone's got any questions on our performance, the markets, the forthcoming event, or partnerships, if it's a general question, by all means use the WhatsApp group. If it's specific and for yourself, then email me. And by the way, I have a new email address, and it's jeff@stocksandoptions.co.uk. And is AND, not the ampersand sign. And that's about it for now. See you next week.